let us know your thoughts. The WhatsApp number is 0809 4440981. And you can also tweet at Smooth981. I'm streaming live on YouTube, so you can catch that live stream up on our YouTube channel. It's Smooth981, and you can even post a comment on there. Our guest this morning is Damilare Asimiyu, macroeconomic strategist, Afrimvest Research and Consulting. Good morning, Damilare, and welcome to Business Express.
Thank you. Good morning.
All right. Now, the global brewery sector is facing a number of headwinds that have resulted in profitability. This is highlighted in a new report from Afrimvest Securities Limited, which also focuses on Nigeria's brewery sector and the opportunities and challenges. Well, Damilare is the author of that report, and he's joining us this morning. Well done on that, Damilare. Now, speaking about your report, there is a chart that seems to suggest that the global breweries market is moving in tandem with global GDP. Tell us about this link.
Yeah, thank you very much. Yes, that is very correct. And the reason for that is brewery products are discretionary goods. So there's what we call normal good in economics, or what we call necessities. So items like food are necessities. But when you look at brewery products are they are discretionary goods. And the typical characteristics of discretionary good is that a typical household would have allocated to necessity first before thinking of discretionary good. And data also backed up that as of 2019, when the NBS, which is Nigerian Bureau of Statistics, last conducted what we call National Living Standard Survey, the data suggests that an average household will allocate about 56 to 57% of their income to food. And out of the portion that goes to food, just only 3%, 3 out of that 56, for instance, an household holding 100 naira, will allocate 56 to food, the remaining to transportation and what have you. But for the portion allocated to food, just only 3 units or 3 naira or 3% will go to brewery products. So that shows you that an average household only allocate very smaller portion of their income to brewery product because it is a discretionary good and not a necessity. And so that is why, even on the global scale, the performance of the GDP, the performance of the brewery sector largely mirrors the GDP, because when the economy is growing very fast and household has stronger purchasing power, then that is only when they can allocate more to discretionary goods.
Okay, now looking at the chart, there's a timeline from COVID-19, and the central bank responses suggest that resulting outcomes had sort of created this headwind for the sector. What chain of events have led to that?
Yeah, thank you very much. So like I mentioned the other time, because brewery products are discretionary goods, the dynamics in the economy affect the sector so very quickly. So for instance, in 2020, when the pandemic struck, one of the measures that was first put in place to tame the pandemic was lockdown globally, or most countries across the world. We also felt it here in Nigeria. I recall for about a month, states like Lagos and Abuja and some other states with high cases of that pandemic shut down bars, pubs, and what have you. And knowing fully well that the largest sales of product like this takes place in pub, or when people are having large gathering, which were things that were restricted then. So it affected sales, it affected the performance. Then secondly, during the pandemic, one of the precautionary advice then was that people who have underlying conditions, maybe diabetes and what have you, should restrain from consuming goods that have sugar content to a certain level. And typically, brewing products, whether alcoholic or non-alcoholic, have this content. So all these combined together affected brewery sales. And that's why, as the global economy contracted that year, sales also contracted. But in 2021, there was a significant paradigm shift. Why? Because there was large influx of intervention on the global scale. More than $8 trillion was injected by different governments across the world, led by the US, who injected over $5 trillion into their economy. And because there was now a mismatch between global supply chain in terms of recovery post-pandemic and demand level, because of liquidity was high, it began to affect price level. And so inflation became the new order from 2020. And as prices were skyrocketing, And CBN were also, I mean, central banks across the world were also trying to contain inflation through policy tightening. It began to weigh on purchasing power of household. And where we are now is that growth has slowed, purchasing power of household are also constrained, and ability of brewers to drive significant sales growth are also then being constrained. And that's why last year, profitability of the sampled global brewers fell significantly by about 41% because finance cost was high, as well as operating costs due to high interest rate environment.
You just talked about this 41% drop in profitability in 2023. What needs to happen for a rebound in profitability?
The simple answer is taming inflation globally. And unfortunately, inflation has somewhat remained very sticky. Yes, global central banks have recorded significant progress. I mean, in 2021, global inflation rose to a record 8.5 level, and it fell to about 6.9 last year. This year is expected to fall to about 5.9 based on IMF estimate. But we are beginning to see that even in major markets, inflation begins to also correct upward again. For instance, the US inflation in the last 2 months have trended higher. It fell to a low of about 3% in November, and December was a bit muted. But we have seen inflation in the US rising in February and March, which is beginning to also raise concern because the more inflation begins to go up, the more households are constrained to look at discretionary goods. So by and large, the solution to brewers posting decent numbers and managing their cost effectively is taming of inflation. So as long as inflation remains very hot, it will be very difficult for brewers to make a substantial profit. And that's on the global scale.
We're speaking with Damilare Asimiyu. Damilare is a macroeconomic strategist from Afrimvest Research and Consulting. We're talking about Nigeria's brewery sector outlook, and the basis of the conversation is a report, which of course was written by Damilare, Turning the Tides on Bottled Gains. Let's bring it home to Nigeria. Your report does point out that the cumulative pre-tax losses of listed NGX firms in 2023 was about 254 billion naira. What headwinds led to this?
Yeah, so aside the global-wide concern, which is elevated energy goods prices, which translated to higher level of inflation, as well as sort of geopolitical tension we're having and disruption since the pandemic. There are other unique challenges that brewers in Nigeria faced last year, which perhaps made their performance to be badly hit, and that is the FX. So globally, we have inflation relatively high because if you compare global inflation to what we have in Nigeria, Nigeria's level is staggering. So inflation in Nigeria last year averaged 24.5%. And if you compare that to 2019, when the NBS last conducted their National Living Standard Survey, inflation then was in the region, average inflation for 2019 was in the region of 11.7%. In 2020, even during the pandemic, average inflation was around 13.3%. So you look at average of 13 moving to 25. So meaning that brewers' price pressure had doubled because of dynamics in the economy, which also reflected the erosion of our exchange rate. Recall that last year, the official rate lost about 49.2% to the US dollars. We started the year with exchange rate of about 460, 480 to a dollar and ended in the region of 900. And this hits brewers badly because, one, brewers still import almost 30% of their inputs using FX. You talk of aluminum, you talk of wheat, which is largely imported from key regions like Eastern Europe, where you have Ukraine and Russia crisis. So all this affected their bottom line, plus the fact that cost of funding also went up because as the CBN also began to move to tame inflation with multiple interest rate hike, last year the Nigerian CBN hiked interest rate by about 725 basis points cumulatively for the whole year. So all these affected brewers. So by and large, the two major factors that dragged that huge loss. It has never happened that all the brewers in Nigeria will record losses, but it happened last year, is basically the dynamics in the FX market and the elevated interest rate environment.
All right, thank you, Damilare. So you have a market share chart for the brewery sector here in Nigeria. Um, is it accurate to call it some sort of oligopoly, right? Like the cement sector in Nigeria? Or would you not call it that?
You're very correct. The brewery sector is actually an oligopolistic sector, and the reason for that is not far-fetched. The brewery sector is a capital-intensive industry, and so mostly when you see a sector that is highly capital-intensive, it's very difficult to see large number of players playing there. So it's capital-intensive, and the regulatory audit is also very tight, and that's why you see sectors like the cement, like you mentioned, the telecoms, the players there are always very minute. It's always oligopolistic in nature because cost of capital, cost of setting up is into billions of whatever currency you are. I mean, it's being used in that country.
All right, let's talk valuation. Price earnings ratio for breweries industry at 19.4 is lower than, well, China, but it's higher than it's higher than maybe India or Namibia or even Sri Lanka. How would you interpret this?
So what that metric is showing is that basically the number is 5-year average price earnings ratio. So we have to resort to assessing the brewers' 5-year average PE because last year all the brewers recorded negative EPS, and because last year was, we can call it an outlier here because it was a year of a major shock. So that's why we use average. Now, looking at what that number is saying, that number is saying that the price paid, by investors in purchasing the shares of any listed brewer in Nigeria is significantly high compared to earnings. So when PE is very high, it's indicating that earnings of the brewers are not very attractive. And the reason for that for Nigeria is not far-fetched. I have mentioned it. The bottom lines of brewers were not decent. So as your profitability is going down, your earnings per share weakens, and of course, your earnings per unit also depletes. So when you have higher price earning, it's suggesting that there is a pressure. But again, there's one fantastic thing about the Nigerian brewery sector, right? Even though the PE is not looking very attractive because of the dynamics last year, the enterprise value to EBITDA of Nigerian brewery sector, excluding international brewery, is in the region of 3.6, which is far lower than average of peers of about 6.7. What that one is showing is that the enterprise value, that the EBITDA, which is earnings of brewers before deducting interest and taxes, is so significant that what the brewers will be valued at today is smaller. So meaning that if you look at factors that are not exogenous, if you assess the brewers' valuation from non-exogenous factor before you began to factor in interest payments and FX losses, which are bottom line numbers, the market is attractive. But when you look at it from what eventually cascade down after you have factored in interest and FX losses, you begin to see that Nigerian market is not very competitive. I mean, the share price are not very competitive, or the market is not very competitive because external factor, which is beyond the control of the brewers, like FX and interest hiking interest rate, has dented their valuation.
All right, that is all the time that we have for Business Express this morning. Thank you for listening, and special thanks to you, Damilare Asimiyu, for joining us on the show this morning.
Thank you for having me.
That was Damilare Asimiyu, macroeconomic strategist, Afrimvest research and consulting. Do stay with us. There's a lot more to come on the Smooth Breakfast.